Let's talk hot picks. Our guest specializes in the semiconductor sector. Let's get more now from Christopher Danely. He is managing director and lead analyst for Citi's US semiconductor research team. Thank you very much indeed for joining us, Christopher.
Thanks for having me.
Can we start off with Texas Instruments? They make a specialized type of chip, the so-called analog devices. Tell us what the attraction here is, please.
Sure. So all three of our top picks, they all make analog products.
Okay.
And what's going on in the analog industry is this is a very highly specialized analog industry, especially at the high end. And these chips more or less translate real world signals to a digital chip that, say, an Intel or an NVIDIA or a Qualcomm would make. So they're ubiquitous. It is a $100 billion industry. Texas Instruments is the largest analog provider in the world. It probably has the highest barriers to entry of any semiconductor chip out there, which is one of the reasons why TI dominates it. Another interesting fact is that Texas Instruments, Analog Devices, and Microchip, they've all, basically created this industry over the last 30 or 40 years. It has some of the highest profit margins in semiconductors, in fact, in the world. So peak margins for Texas Instruments, gross margins are like 70%. Peak operating margins are 50%. So huge barriers to entry, very, very highly profitable, very large industry. What makes it super attractive to us is that you've had this massive downturn in the semiconductor industry. So these margins and earnings for Texas Instruments and these other companies are depressed. They're about half of what they normally would be. And, in terms of basic cyclical investing, you want to buy the company when the margins are at the lowest. And right now, Texas Instruments margins are at the lowest.
Why are they low? Just over capacity in the industry?
No, that's a good question. So there's two reasons. One is systemic, and the other one is unique to Texas Instruments. Number one, now remember when we had COVID, right? I know we don't want to remember it, but we have to for certain reasons. Remember when we had COVID, you had all these shortages in semiconductor chips. Analog was where the shortages were most acute, especially on the automotive side and the industrial side, right? Because you had a bunch of factories that were shut down. Now, that was a good time for Texas Instruments, but it also led to all these shortages. And when you get shortages in any industry, whether it's semiconductors or tulips or coffee beans or toilet paper, like we all found out, you will get hoarding. And so companies hoarded the analog chips. And after the chips became more available, they all worked down that inventory. So you had this massive inventory correction. So for the analog industry as a whole, the units declined peak to trough about 35% from 2023 to now. So huge decline in inventory. So that's number one, and every company went through that. Number two is that Texas Instruments has these sort of spending cycles. So about every 15 years, Texas Instruments needs to invest in manufacturing and they need to invest in factories, which they just finished. The problem with that is that with this increased capital expenditures, you get increased depreciation, and that depreciation weighs on margins. So half of their decline in margins was due to this downturn, but which is cyclical, which is going to go away. But the other half is due to this spending cycle, which also is going to go away. So Texas Instruments margins declined about 15 points. And that only happens about every 20 years with Texas Instruments. So right now we're at the bottom of that cycle. We've just started to come out of it.
We are a bit tight for time. Analog Devices, another player in this market. What makes them stand out for you?
Sure. So Texas Instruments and Analog Devices are basically the BMW and Mercedes of the analog industry and really of semiconductors. So two of the highest margins out there. The difference would be that Analog Devices is a little more defensive. So they have high margins. They're usually a little bit higher than Texas Instruments. Their margins have come down like Texas Instruments, but not quite as much. So the way we pitch it to portfolio managers is if you're still very cautious on, what's going to unfold as the year goes on. You want to be invested in analog devices. They're a little more defensive. You don't have quite as much upside as you do with Texas Instruments. Analog devices, their end markets are a little more levered towards the industrial end market, which tends to have less volatility. If you are a big believer that we're going to bounce back and all this tariff trade war is going to be forgotten soon, then you want to invest in Texas Instruments because they have more leverage to the upturn. So it's really, if you're cautious, you want to invest more in analog devices, more industrial. If you're more bullish, you want to invest in Texas Instruments. It's more of what we call an economic boomerang.
And then finally, a pretty unimaginative name, Microchip Technology, but you like the look of this stock. Tell us what it has going for it, please.
Sure. So Microchip they do microcontrollers and they do analog. Microcontroller is like the simplified microprocessor for common everyday applications. And microcontroller sits right next to where the analog is, to where the analog chip is. Briefly on Microchip. So they had by far the biggest decline in margins and sales. Their sales dropped over 50%. Their earnings went from $5 to literally 62 cents. So a massive downturn. This microcontroller industry was the biggest downturn in semis. This was the parts that were most in shortage, especially with the automotive end market. Remember, President Biden was like calling GM, and GM was calling Microchip, where are my chips? So you had this massive inventory build. Now we're just coming out of the downturn. So you have, in our opinion, by far the most earnings upside. Their earnings could literally quadruple off the bottom. The issue is there is more risk in Microchip, right? They do have more debt than Texas Instruments and analog devices. But again, if you believe that we're through the worst and we're going to have a nice, sort of economic ramp the rest of this year and next year, Microchip has by far the most upside in our entire coverage universe.
And tell us, for these analog chips, do you need the same kind of giant foundries that you would have for GPU chips, for example?
No, you don't. So the difference between analog and, say, a leading edge chip like what an NVIDIA makes, analog chips are tiny. They are like literally about that big, if you can see my fingers. The cost of an NVIDIA chip is, thousands of dollars. The cost of an analog chip is $1.25. So you don't need, high-end manufacturing. You don't need to spend all this money on fab equipment. One of the reasons why their margins are so high. So what's the barrier to entry, right? It's all about the design of the chip. So to be able to design a high-end analog chip that Texas Instruments or Analog Devices or Microchip makes, you literally have to train at these companies. So you need to get, a master's or a PhD, and then you have to sit next to this guy, this old guy who's somewhere in his 50s or 60s, and literally watch him design a chip for 5 or 10 years before, as a young engineer, you can learn to design the chip.
Wow.
The analogy I would use is it's like becoming a chef at a high-end restaurant, right? If you want to go work at some fancy French restaurant, you can't just start one up fresh out of cooking school. You've got to, what they call stage, and sit there and watch the high-end chef make food for 5-10 years before you can do it. It's the same thing with these high-end analog chips. That's where the barrier to entry comes from.
That's really interesting that it's a craft, a human craft to that extent. Yeah. We learned a lot about chips. Sorry, I cut you off there. What did you say?
I like that. I'm going to use that in my notes. Thank you for the tip.
Good. Christopher, thanks very much indeed. Christopher Danely, Managing Director and Lead Analyst for Citi's US Semiconductor Research Team. Coming up.